Hey everyone, in this video I'm going to answer if Raytheon Technology stock is a buy. I'm going to use my simplified 6-step framework. By the end of the video you're going to have your answer, so stay tuned. The first step in my framework looks at the customer value, and revenue has grown from 57.7 billion in 2012 to 64.4 billion in 2021 for Raytheon. So there's evidence that customers like what it's selling, and what it sells is aerospace and defense systems to militaries, governments, and enterprises worldwide. Another thing I like to look at is the net promoter score, and Raytheon's NPS of 15, if we look at the scale here, is a good net promoter score. The next step in my framework looks at unit economics, and for Raytheon, even though it's got solid gross profit margin of 19.4% in 2021, what is troublesome is the trend. It had a 27% gross profit margin in 2012. It's fallen to 19 in 2021, and operating profit margin is experiencing a similar trend, falling from 13.3% to 7.7% in that time. The next step in my framework looks at the total addressable market, and for Raytheon, estimates were ranging from several $100 billion to over $1 trillion. So I would say that it has an excellent market opportunity here and going forward. Competition for Raytheon, it's competing with several large and entrenched competitors, including Boeing, Airbus, Lockheed Martin, and more. These are long-standing companies with great relationships with governments and institutions, and so it's going to be a challenge for Raytheon to encroach on and gain market share from these excellent businesses. But in addition to just competing on price, it has to compete to deliver better capabilities, more precise timelines, right? Because governments operate on timelines, and it could lose out on a contract if it offers a lower price but cannot deliver on that product until 6 months later, then maybe a competitor can deliver on that product. So timelines and precision on the timelines is also important for competition, and the lower cost of servicing these things, right? So it's not just how much the unit of the item it is that it's selling, it's also the service cost to service these items. So competition based on several categories, and that could explain one reason that could explain the declining gross profit and operating profit margins. The next step in my framework looks at valuation, and Raytheon stock is not cheap. Looking at the price to earnings and price to free cash flow, price to earnings of 33 is on the higher end. In fact, before 2020, it had never traded at a price to earnings above 20, and now it's at 33. So the stock is relatively expensive on price to earnings, and similarly in price to free cash flow at 48. Before 2020, the stock had traded, the highest was barely above a price to free cash flow of 25, and now it's at 48, and it's nearly doubled in 2022, the price to free cash flow, and the stock has done relatively well in 2022. So the risks are the final step in my framework, and the main risk I'm going to highlight here is falling profit margins, which is evidence of a bigger risk, which is the strong power of its customers, right? Typically, um, if you have a significant amount of your business dealing with governments, that gives the government that leaves you at the whim of government negotiators who could press you on your margins, and there isn't much you can do to push back because you want to win those large contracts that could reach several hundred millions of dollars or in the billions of dollars. And so you're not going to push back so much on price because you want to win that large contract. And if you don't negotiate, if you don't offer a lower price, maybe one of your competitors will, and you risk losing out on a $1 billion or several $1 billion contract. This is the risk when you're dealing with enterprises or governments that have strong negotiating power because they're spending so much money with you that they can exert their influence on you when they're negotiating for prices. And this is a risk for Raytheon. Finally, now that I've looked at each step in my framework, let me give Raytheon a grade. Customer value, they get an A. They're selling these high-tech, leading-edge aerospace and military technologies that governments and militaries strongly rely upon to, serve their needs, protect their nations. In fact, Ukraine is using many of these Raytheon developed military technologies on the battlefield right now that's helping it defend its country. So I'm sure if you were to ask them, they would say that they are getting a great value from Raytheon Technologies products. Unit economics, they get a B because even though the margins themselves are solid, it's the trend that looks troubling. So they get some minus points for that. Total addressable market, A plus here, massive industry, no doubt about that. Competition, they get a B minus here because they're competing against several entrenched and effective competitors that are winning contracts and threatening for Raytheon to lose contracts to them, and they're competing across several metrics and not just price. So competition is fierce in this regard. They get a B minus. Of course, fierce competition is not good news for investors. Risks, they get a B because of the customer power in negotiating, bringing down pricing and other terms that's bringing down profitability. And of course, valuation, they got a C minus, a low score here because we saw it's the stock is trading at a premium valuation going back to before 2014. It's arguably more expensive than it's ever been. To answer the question, is Raytheon stock a buy? The answer is no. Raytheon stock is not a buy right now. The main reason why I say Raytheon stock is not a buy right now is because of the very expensive valuation. Yes, its prospects are excellent in the near term as the US military needs to rebuild its inventory after sending billions of dollars in aid to Ukraine. However, even so, the stock has arguably overpriced that excellent prospects in the near term, selling at a premium valuation. Okay, so that's all I've got for this video. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.